sharp focus on balance sheet and working capital is now yielding huge dividend for KNR Constructions, and this could help it strike a balance even during the slowdown caused by COVID-19. In our ideas for profit today, I'll discuss whether investors can really keep an eye on this one for the long term. Well, during the March quarter, the company's revenues dropped by 6% on a year-on-year basis. However, revenue grew by 21% when you compare it with the December quarter. Now, the execution was good, and because of that, the company was able to restrict the decline in the revenues. Now, the operating margins were also better because of the improving revenue mix. Also, high margins business such as the irrigation project and also the hybrid annuity model projects had close to 71% of contribution in the March quarter. This boosted the EBITDA margins by about 160 basis points to 21.7%, leading to a 2% year-on-year growth in EBITDA. And this is a good trend, and marginal pressure on revenue could be compensated because of the better operating margins as well. Nevertheless, higher interest cost, increase in depreciation and lower other income dragged the reported profits by 27% to 67.2 crore rupees. During the March quarter, the company's interest cost jumped by 93.3%. And this is attributed to higher working capital and project level debt. During the quarter, the receivable days also jumped by 38 days. Its debt of 214 crores is merely 0.1 times net worth, which is the lowest among the construction companies. Its interest as percent of EBITDA also stood at merely about 10%. In the March quarter, the impact was quite limited. But the disruptions caused in the months of, say, April and partly also in May would show up, and thus the expectations are quite low for the June quarter. However, the construction activities have also started gradually, and it is expected that the labor issues will also ease going forward in the second half of the current financial year, thus compensating for the drop in execution in the first half. And despite a good start where the order book jumped to over 7,800 crore rupees, the company could definitely record marginal growth in revenues. They also expect that fiscal 2022 could be much better. The government has led construction orders have also started to follow in, and competitive intensity is dropping, which will definitely benefit companies like KNR, which have a strong balance sheet. KNR Constructions has also recovered partially from the lows of 171 rupees that were recorded in March of 2020, the current levels of about 216 rupees per share. It is trading at a significantly lower level than the 52-week highs. Now, we do expect a nominal earnings growth in FY22, and based on that, the stock is trading at 11 times of its earnings. So this is quite reasonable when you consider the strong order book, the low leverage, the high return ratios, and also the opportunities in the construction space. Investors could therefore look at adding KNR Constructions to their long-term portfolio, looking at the strong positives that it has, including the strong balance sheet as well as the going forward outlook on the revenue growth in FY22.